Hey, what's going on, everybody? It is Aaron Trevino here, and we have a very wonderful guest. We have Felix from Houston, Texas. How you doing, Felix?
Doing well. How you doing?
I'm doing fine. This was one of the more unexpected podcasts because we haven't really been in touch over the past few years, and it's great to reconnect and have you on the show.
No, thank you. I'm really grateful for the opportunity to reconnect with old friends and see where we're all at, how we're all doing. And it's great to, have friends even within the industry, since that's always a great point to connect and relive certain relationships.
Yeah, absolutely, Felix. So for those of us who aren't too familiar with you, would you introduce yourself, please?
Yeah. So my name is Felix Gaulke. I'm actually originally from Germany, so if you hear a little accent, that's due to that. I moved to Texas about 10 years ago, and I quickly kind of decided where the cool spots are. So I went to University of Texas, where I met Aaron, definitely Miss Austin, um, and then quickly decided that my interest and passion lies within real estate. So after graduating with a finance degree from the University of Texas, I then started a career in investment sales, um, firm in Houston, Texas, where we mainly focused on Class A and Class B apartment complexes. And there we work with many investors trying to disposition their asset and reposition their assets. So there I've learned many tips and tricks that make me now decide to basically go on my own and start my own acquisition platform.
Yeah, absolutely. That's definitely a heck of a journey, Felix. So when you first came over from Germany, you came to the Houston area, or where were you?
Um, I'm first moved to Houston, where I went to a smaller private university. You might heard of it, called University of St. Thomas. But after that, I mainly want to get the better, bigger college experience, and then decided to transfer over to the University of Texas, which
Yeah.
was a great decision. I wish I would have done it much, much earlier.
I'm curious, what was special about UT to you? What did you really like about your experience there?
I would say the people, right? The great diversity of the people that you have all throughout Texas, but I think Austin's a pretty cool melting pot. Um, the outdoor availability, and then of course a great education. UT is renowned to have great professors, great students, so it's a really great learning environment to kind of better yourself and really figure out what it is you're interested in. Um, so that really helped me narrow down my interests. And then just the really overall college US experience, since in Germany, university is pretty cut dry and not all too much fun in that sense.
Yeah, no, absolutely. And I have to ask as well, given that, you were born in Germany and you eventually came over here to America 10 years ago, what was something that when you first got here was maybe kind of funny or maybe surprising to you about America?
Many things, right? The people, I would say, are much more open and welcoming here. US being, the global, basically business capital, if you will, in a lot of sense. It's a very business friendly environment, particularly in Texas. So that's one of the main reasons why I saw the opportunity coming over here. So between the business opportunity and the people that I've encountered living here, I thought it was a really cool place to basically call home for a while. And yeah, I just really liked everything I saw so far.
Yeah, absolutely. And it's interesting as well. I'm not exactly familiar with how large Germany is, maybe compared to Texas, but it's that's a heck of a drive driving from.
Size wise, it's about the same size actually. The whole country of Germany is just, I think, a little bit smaller than Texas is. So,
Is that
but
right?
yeah, but we've got more people, since it's a little bit more dense. But yeah, that just tells you how big Texas is.
Wow, I actually did not know that. I just know that it's a heck of a drive. I mean, if you want to drive Houston, El Paso, you'd be in your car for a long time.
Yeah, I mean, the longest, if you drive from the very southern tip of Germany to the very northern tip, it'll take you maybe like, I don't know, I'm just guesstimating this, but 10 to 12 hours, right? And you're basically from the longest point to the other furthest point in the country.
Yeah. Yeah, no, absolutely. And I'm curious as well, maybe when you were growing up in Germany, did you have any inclinations towards real estate? Were you around it growing up in your childhood, or how did you kind of get interested in real estate?
Yes, I did grow up around real estate. My family on my father's side um, did real estate on the commercial and residential side, kind of all of their lives. My father did it, and his mother, who started a company there, started. So it was kind of always around my field of vision, if you will, but never really got serious or looked into until probably mid college, I would say. But the interest or the certain knowledge pool that existed, right, was actually there. Since that's one of the things that I found very peculiar, actually, is that within the world of real estate, particularly if the financial side, it's not really discussed about or mentioned a lot, right? If you go to university, you hear about banking jobs and lawyers and doctors, and even within the financial world, certain sectors that are pretty popular or hot, but no one really talks about commercial real estate and the all the benefits that come with commercial real estate, really.
Yeah, absolutely. And it's interesting as well, even when you say the words real estate, people kind of have this, inclination to think, okay, well, you're buying or selling homes, right? But there's really so much more to it.
Yeah, yeah, it's not just you know, like maybe most people will do 1 to 2 times in their life, they'll buy a house and be like, well, I like this house, I trust it, won't really go down much, but it's more of an emotional decision, right? Because they like the way it's built, the way the house flows, the colors, whatever it might be, right? Versus um, within the world of real estate, there's a real business aspect to it where people acquire assets solely based on the performance of that asset, right? Like a real like a investment as most people know them, right? It's just not as heard of in the normal world, basically, to hear of commercial real estate assets that some person or group of people own a certain entity that is a valuable building that's producing income. And I
Yeah,
think that's a pretty cool little secret that I think more people need to hear of.
yeah, absolutely. And then you get into all those little acronyms, right? Your NOI, your ROI. There's a lot more to it than people think.
Yeah, yeah,
Yeah,
that's true.
and you said something interesting as well before, Felix, was you mentioned how maybe kind of midway through college, you got a bit more serious about maybe what your interests were, what your path, would be. Was there any particular aha moment that you had when you said, hey, this is the way for me?
Yeah, I mean that's a very good question. But if I was just like probably most finance majors on a track to go IB, and then the kind of normal track to exit into some PE field and kind of narrow down what niche I really want to position myself in. And within that execution I had in my head to follow the path, basically, I just realized that I could go to a little bit of an easier, more enjoyable route by looking into commercial real estate, into specifically the multifamily space that I've heard of, but never really looked into that much further. Um, Basically found a group that had an open position that I thought was a good fit, and I kind of knew their track record and what path they were on, and that aligned with the knowledge that I wanted to acquire at the time to now put myself in the position I'm in presently, so I can execute on the dream that I have, which is to buy and own real estate for myself and my partners for long-term wealth generation.
Beautiful, beautiful. I'd love to hear it. And I'm curious as well, is there an overlap maybe between, what you're doing now compared to, your first job out of college and kind of your experience thus far?
Um, yeah, so we can definitely go into that. I mean, Because I kind of decided the route I wanted to take after college, I specifically seeked out my first role, which was with a brokerage firm that specifically um, dealt in the space I'm currently in. So in multifamily transactions, it's just on a bigger scale, basically, since there in my corporate role, we mainly worked on the middle market, if you will. So most deals that we transacted on were in the more 12 to $80 million ranges, versus now I'm a little bit more smaller scale that I hopefully grow, but I'm not quite there yet. But I mainly chose that role because I know what I would learn there, and all these things over there I did learned over the last 4 to 5 years are requirements that are needed to go out on your own and wisely buy these investments with your own money, other people's money, but just to kind of be mindful of what you're doing, since it is not complicated or it's like hard. I think anyone can really do this. It's just a lot of steps that you have to take and a lot of advice you have to seek out and relationship you have to build. So it's really just time putting in, honing your craft and building relationships. And that is the main essence. It takes time if you want to really be successful in this industry.
Yeah, absolutely, Felix. And and what's interesting as well is, I mean, you've already taken the most important step, and that's the first one, right? That's just getting started.
You mean, yeah, I mean, particularly going out on your own is a big step. I gotta say that, since if you go out on your own, you're basically just starting off with an idea, right? I don't really doesn't matter what it is. If you start a restaurant, sell a product, service, whatever it might be, you're really just starting off with an idea that you really believe in, and then you basically try to present to the world that, hey, I'm trying to, you know, serve a certain value and add value to people's lives, and this is the way I think I can give back to people by, you know, structuring good deals and delivering good returns for everybody, basically, right? But from idea to execution is always a long road, and I just got started recently. So I'm still finalizing building a platform now, but you can see I have my website up now, and I got already a deal targeted for later this year that I'm tying up numbers now, and we'll deliver the prospectus soon. So that will be a first one that I will be getting done this year, and after that, I hope there'll be many more to come.
Yeah, and then you're really off to the races right after that first one, right?
Yeah, it's always about the first one, right?
Yeah, no, absolutely.
Yeah.
I mean, something like this, it takes courage, right? It takes, not only a game plan, being able to execute, but it also takes faith and courage, just being able to, to quit your W-2 job and go out on your own.
Yeah, I mean that's part of the scary part. But again, I think if you have a good idea with a reasonable execution and a plan in place, that there's never going to be perfect timing. We're young. We can take all of our energy and all our basically experience that we've learned in the last couple of years to build our dreams and basically serve people in the best way that we define for ourselves. So I mean, I see you're doing it, and I'm just trying to do the same.
Yeah, no, absolutely, Felix. And you brought up something interesting as well. You mentioned how there's really no perfect time, right? And it kind of seems like it's easy to delay and, oh, well, I can start once I have X amount of dollars, or once I do this, X, Y, and Z. What do you mean by that? There's no perfect time?
Yeah, I mean, right, we all tell ourselves that, when this happens or XYZ, or I'm gonna start working out next week or whatever that might be. Um, it's mainly just it's mainly focusing on what it is that you want to achieve and within what realistic time frame, and then setting little reasonable goals and negotiating with yourself to accomplish that. I mean, the one of the um, hardest thing to work for yourself is that you're your own, you know, basically strictest boss and worst employee, right? It's like you have to tell yourself work, 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 and achieve your goal, but also, take care of yourself, not overdo it or whatnot. So there's just that structure that most individuals probably are used to from a certain employer. So really just keeping yourself honest, staying on track, staying on goals, setting reasonable expectations with yourself to slowly execute a plan is basically the key to successfully building your dream.
Yeah, definitely, Felix. And you brought up something interesting as well, was also, that discipline or that structure, and if anything, it's a testament to a change in mindset, right? Because you're kind of in this maybe corporate mindset for a few years. You're kind of used to that way of, things being done. And now your schedule's wide open. How do you keep yourself organized?
That's also a good question. I mean, I just recently set up multiple calendars. I have a personal calendar and a work calendar. So really structuring as many things as you can possibly, again, because when you're taken out of a corporate environment, everything is structured for you, right? Like your director is telling you we've got a Monday morning meeting, and your boss is telling you we got a review at 4, and everything's kind of filled in nicely for you throughout the day, right? Your deadline is this day, yada yada yada. So when you do make the switch, or even when you partially make the switch and start a side business or whatever it might be, right? You have to really dig deep on scheduling, creating a structure within your operating system or workflow, wherever that might be, in the morning, at night, throughout the day if you have the time, and also leveraging all tools that are available. I mean, I've learned probably more in the last 2 months, all these tools that are available now that I either ignored or just was made aware of in the corporate environment because it just maybe wasn't maybe viewed in someone else's eyes as useful, but I'm like, now this is a very useful tool. So there's so many automations that I've recently learned of that really made my day-to-day much easier, or certain things that you can just leverage.
Yeah, absolutely. It's kind of one of those things. It's not really until you put one foot in front of the other that, it starts to make more sense and you find out about those things, right? Like those tools or automation.
Yeah, yeah, and I mean that's another big point just in business in general. But I think real estate sleeps pretty hard on that. It's just the advancement with technology and property technology specifically, that can enhance everyone's experience: the tenants, the operator, the owner, the investor. Uh, Everyone can benefit from these certain enhancements if everyone's open to it.
Yeah, absolutely, Felix. And, I'm curious as well, when you say multifamily, it sounds, someone could think of, oh, hey, maybe that's a duplex or maybe it's 500 units. What particular types of properties are you kind of going after?
Yeah, I mean, in the strict fashion, multifamily is considered, 5 units and higher. Um, but I'm mainly looking at deals that are probably starting at 20 units up to around 100 units potentially. But I mainly go around the dollar figure, so I'm buying deals in the $2 to $8 million range currently, and that will progress as the platform grows. And within that, I mainly focus on the Texas market. As I mentioned, I have a deal in Houston I'm already looking to buy and have a pretty good relationship with current ownership. So that will be on my main goal this year.
Yeah, definitely. And it's always helpful too when you, like you said, have that relationship with that current owner.
Yeah, and that's I mean, as you probably know, that's a number one thing in the real estate world is, knowing your craft, knowing your numbers, keeping with trends, but mainly being a good person, keeping up with relationships, sharing information, and yeah, just keeping up with people, communicating effectively, all these really good kind of life skills that help us in the everyday life. If you just kind of carry that into your professional role, it's basically also a big thing. Like highlight your strengths when you move from a corporate role to more entrepreneurial role. Highlight your strength, outsource your weaknesses, and you will benefit from that greatly too.
Yeah, and I mean that's so crucial there too. And it almost sounds counterintuitive, right? Because it seems like, when we're growing up, they're kind of taught, hey, focus on your weaknesses and improve them. But you're suggesting
Yeah, exactly.
the opposite. Why is that?
Um, well, obviously, if you have certain weaknesses or you want to be a well-rounded person, right? So like certain things, if you absolutely cannot handle, you should definitely try to brush up on that. But there comes a point where you go out on your own and not just one role, you're wearing multiple hats and you're trying to grow, then you yourself have to identify what role really it is that you want to play within even within your own organization. Just because it's your company doesn't mean that you have to be the CEO. If you're like, I want to be the day-to-day operations guy, like that might be you. You can still own the company, but you can hire a CFO or a CEO in that regard. Um, but clearly, most people want to be the CEO of their business, owner and CEO of their business, which is great. But the other vital point to that is then you have to figure out as you grow and take on more responsibility. Similar for myself, I'm not going to be able to asset manage all these apartment complexes as I acquire more, or even maybe do all the underwriting and sourcing or equity raising. I'm going to require help or certain assisting positions or better automations to assist in that role.
Yeah,
Yeah.
definitely.
So identifying talent and also rewarding that talent, uh, it's very crucial.
Definitely. And I mean, that can be a crucial strategy as well, just kind of recognizing, hey, here are my strong suits, here are my strengths. And then, like you said, just kind of outsourcing or delegating the rest, right?
Yeah, and it also keeps everyone happy and honest, since we all love doing what we really enjoy doing, and when we have to do something that's maybe a part of a job or an aspect where we don't like to do it, it's not as pleasant to do it. So not to say that we all have these activities that we need to do that's not fun, but let's try to you know divvy it up where everyone's kind of doing what they really want to do.
Yeah, yeah, absolutely. And, I guess kind of on that note, speaking of, what you want to do and what you're doing, I know you briefly touched on, kind of your range is 20 units to maybe 100. What does Felix do on a day-to-day basis?
Yeah. Well, is it just kind of from wake up to going to bed, or?
Yeah, I mean, if you'd like, but, just more of, I guess, what does your workday look like?
Got it. Okay. Understood. Um, yeah, so currently I'm tying up the underwriting for the asset I have in mind in acquiring. So there I'm pricing out debt right now. So I'm meeting with a lot of lenders, so banks, potentially might go the agency route as well. So basically right now figuring out the debt piece, which is the best route to go. And with that, I'm tying up the final numbers for the actual underwriting, since those numbers will go into the final underwriting. So just kind of just like a chicken and egg game I'm playing right now with the final numbers of the model. But besides that, I'm putting the actual marketing, just prospectus together. So right, like all the details about the property, all the um, investment criteria, and the performance that we're projecting the asset to have over a long term. So those are my main responsibilities that I'm doing on a daily basis right now, besides tying up certain final nuances of the deal.
Definitely. And I find this so interesting as well, with the underwriting was that I was speaking to a multifamily investor out of California, and he was talking about how, he's in his 50s, and he was saying, hey, over the years, I've taken every real estate course over the sun and paid all this money and blah, blah, blah. But he said one of the most valuable things he's done in his career was taking a small course about underwriting.
Mm, That's interesting. I mean, that's a very interesting fact, because I mean, you can obviously learn your lessons by owning lots of real estate, right? Like lots of single family homes or whatnot. But I've personally talked to lots of investors that own several homes here in the Houston area and did quite well with those, but always at a higher cost. And that cost doesn't necessarily mean financially, or that didn't make the highest profit, but also it's like time management, heartache, right? Just the stress that comes with self-managing all these assets. So it's a clear argument at a certain degree that these now newer so structures, these multifamily funds, where more so normal investors can participate in the growth in the multifamily market, is a really good tool for to get into at that level. I believe so.
Yeah, definitely. And you touch on something that's so important as well. You touch briefly on that relationship between time and money, right? Because really, when you're underwriting, I mean, amongst everything else, you're making sure your bases are covered, but basically underwriting is saying, hey, is this worth my time or not?
Yeah. So often it comes, there's like a little, just a eye check, right? Like I'll look at certain deals and quickly decide if is this a starter or not. Does it hit certain basic metrics for there to be a financial enhancement? Because really, it is my job is to find under basically under assessed or unappreciated properties that show a certain lack in either income. Maybe they've not been operated correctly, where rents have been neglected, and certain rent increases have not been upheld or are not up to market. Expenses might be through the roof. So my job is really trying to identify mismanaged assets, and then basically financial engineer and squeeze every little value out of it, so that the investors in the deal have a successful deal, and we all exit it and are all happy. Because the cool thing about commercial is it's valued based on income, right? It's not based necessarily just on the sole appreciation, right? Like a normal residential family house might be. It actually, it has a huge lever based on the income it produces. So if you can increase the revenue or cut expenses, or maybe even through credit financing, have a really cheap debt on there, well, now you generate much higher cash flows for you and your investors, which in return means you can sell the asset at a significant increase from where you bought it from.
Yeah, definitely. And you brought up something interesting as well, was you mentioned the financing. Could you kind of elaborate more on, maybe credit or finding the cheap debt and what it means in this context?
Yeah, absolutely. Um, so when you're looking to buy a potential deal, I mean, you always got to think about, okay, what are the terms that, under which terms could I acquire this asset, right? So most of the times in current market right now, from the conversations I've had, is mostly that you have to bring to the table 35 to 30% equity. So that means you have to go out. So for argument's sake, $1 million deal, if you're trying to acquire $1 million deal for yourself and investors, you would have to bring to the table, let's just say 30% of that, because the banks are going to require you to put 30%. It's basically like a down payment to buy this asset, and then they'll fund the 70% remaining. So that's a loan. So under these terms, roughly speaking, you should be able to get, if you have a good sponsor until that qualifies for a loan, so meaning maybe their net worth is equal or greater to the loan, you can typically get under 5% with the banks at a 20-25 year amortization. Is what I'm currently seeing in the market.
Yeah, definitely. And I mean, that's the most crucial part, right? Because people look at properties, they drive in a neighborhood, they drive past buildings and they may say, hey, that's nice, but they don't see maybe the financing that put everything together.
Yeah, yeah, and that's a huge role that one has to think about, right? You have to quickly, when you look at a deal, because the main thing is solving for time, right? It's like, that's also a great great aspect of this business. If you know what you're doing and you know what you're looking at, you can save yourself and everyone else a lot of time because you're just executing based on a certain strategy. If you don't know what you're looking at, you're gonna have to look at 300 deals to then finally find like the good deal that you've now identified because you've looked at a little 300 deals. But you're not gonna have the certainty to pull the trigger because you just don't know what is a good deal, what's not. So that only comes with experience by either vetting hundreds of deals or by having experience and having a certain business plan and certain filter that you vet deals through. So if you kind of have that in place, then you got a good relationships, network, right? You know, those are main things. If you have all those, you should be good to go.
Yeah, definitely. And it almost sounds like anything else, right? Just kind of you know, just kind of getting those reps in regardless of what it is.
Yeah, yeah, and yeah, just I mean, you gotta solve for good returns, having business strategy in place, and then yeah, mainly working your network, talk to lenders, and then really making the decision. Okay, does this deal pencil to my business plan? Does it meet my criteria? Does it meet the investor's criteria? If that's the case, you gotta pony up, put together a pitch deck, raise the money, and at first probably even sign for the money. So you better be sure what you're doing.
Yeah, definitely. And, you know, I mean, let's say that, you know, all the financing is lined up, everything's good to go. You've secured the property and you have it now. You know, you touched briefly on, you know, adding value or maybe a quote, a value add project, right? And you talked also about, you know, adding value to the project based on maybe the fact that it was previously mismanaged, maybe, you know, the rents weren't at a particular rate. You know, what other strategies do you have maybe to add value to a property?
Yeah, I mean, you already mentioned several of them, but yeah, so adding value, you can do it multiple ways because I mean, adding value you can do it in the most literal way of the term is by upgrading the value, by upgrading the asset, by enhancing the property in the form of putting in new kitchens, new bathrooms, new floorings, maybe ceiling fans, door handles, just anything that would basically beautify the asset, particularly from the inside, right? Since that's where the tenant appreciates the benefits the most. So if you were to upgrade these mentioned aspects with inside of an apartment, you could underwrite the premium for that, along with obviously a little bit curb appeal of the actual asset. So outside, maybe new coat of paint and certain little upgrades that just make the asset a little bit more appealing to the eye. But besides that, there are lots of managerial and financial things that you can do to increase value. So you can, as I touched upon, increase rents. So if you buy an apartment complex that has been owned for many years, it's for a decade, and just kind of has been managed along the way, the current owners are making money, they're covering the debt. But they're right, like most people who own these assets, particularly on the smaller scale, are active investors in the sense that they own it maybe individually and they'll have a management company running it, but they're not really active in a way where they're owning the asset with the business plan in mind or certain execution, right? So the goal for them is to kind of just cover the debt, but not really squeeze out the value of the asset that it could really perform to, basically. So there you would then identify where there's a certain discrepancy in the market rents. So you would increase rents and then basically solve for that higher value. And then the other way to increase value is by decreasing expenses. So if you see that the asset is running high due to increased costs in certain service that you're offering, or maybe you're not recapturing utilities, or maybe you haven't protested your taxes down, or I mean, this doesn't increase the performance of the asset, but if you were to refinance, you could pull money out to pay out your investors. So all these things are just are ways where you can improve the actual asset or improve cash flow within the structure of your investment for your investors.
Sure, definitely. And I can tell just from that explanation, that's not only from a position of experience, but also trial and error too, just looking and finding different strategies to make the deal work.
And then obviously you also want to buy in an area that you just believe in, right? So it would be advised to look into an area where you just see a lot of growth, you see a lot of support, you see maybe a lot of highway expansions, new schools, jobs. It's always a really big factor that you kind of want to trail or follow, um, and then just organic migration or net migration from cities or even states. So Texas also has a 2 thumbs up on that. So yeah, but so all these factors should basically guide you on your search of property and then help you underwrite conservatively, but still with a profitable exit for you and your investors.
Absolutely. So, I haven't asked about this either, but are you strictly focusing on the Houston area, anywhere, within driving distance, or, what sort of markets are you kind of focusing on?
I'm currently um, I'm mainly focused on the Houston area since I like to keep it local for right now. With exceptions to Austin, San Antonio, I would clearly buy deals there as well since it's literally within reach. I'm familiar with those markets as well. But other than that, I do plan to expand within the next year or two into other states. Since I really like Colorado, Denver has some really good growth indicators, I believe, particularly in the multifamily space.
Yes, definitely. So, I know you've talked a lot about a lot of different strategies. You talked about, maybe your journey working in the multifamily space. What are you looking for right now? Or maybe someone's listening. How can they help you right now?
Yeah, that's a good question. um, yeah, so I mean, I'm open to working with other newer funds to potential JV on certain deals, and then besides that, the whole bandwidth. I'm open to talking to potential investors. I'm open to talking to appraisers for local markets, as I mentioned, like maybe San Antonio, Austin. I may have most of my contacts are here local in Houston. Um, but yeah, so anyone that is in the multifamily space, even general contractors that maybe want to be more in the development side, since I'm also leading a couple multifamily developments in the Houston area. I'm open to making relationships there as well.
Okay, yeah, I guess we weren't really able to touch on the development aspect, but what sort of developments are they also in that 20 to 100 unit range or smaller, or what are you kind of looking at?
Yeah, so we also develop a little bit on the side. There we're mainly looking into tertiary markets, so outside of Houston. Yeah, so 20 to 50 is the size that we're staying on that side.
Yeah, definitely. And I mean, it's almost like you're having to, wear two different hats there, right? You're kind of looking at multifamily from one perspective, and then you're also kind of looking at it from a construction development aspect as well.
Yeah, I mean the good thing is that they kind of go hand in hand, since a lot of the research up front, since development is a riskier game to play, since you're betting on a non-income producing asset to be completed in basically 2 years and then perform according to a plan. So it's much more research um, and risk intense. But the good thing is from that research and those meetings I'm part of, I get a really good feeling and knowledge of the markets that I now know about and want to invest in. So it's kind of like a win-win situation in that area, since I can help out with new developments while also learning what these areas are planned to be and what the long-term visions for these kind of assets and areas is.
Sure. So, regarding these developments, are you mostly focusing on taking down the land, or, what are the different maybe phases or parts of developing a piece of land?
Well, yeah, I mean, there are multiple phases from land acquisition to talking to architects, pulling permits, talking to cities, getting everything under one hat. That is not so much my role, since we have a general contractor and a project manager that kind of orchestrates that whole arena, since that's a lot to handle. That's a whole person job, if not two, to just maintain all that. There, I'm more so helping underwriting the deals and just basically bringing my expertise, which is the kind of financial expectation and basically figuring out the performance of the asset, right? Like, how would this asset perform in this market, and what is a reasonable expectation for this asset to perform based on the current market condition and future expectation.
Absolutely, Felix. Is there anything you haven't said that you'd really just like to hit home?
No, I think we talked a lot. I mean, this is my first installment of an interview in this kind, so definitely learned a lot of new things today. But besides that, I'm happy to connect with anyone that has questions, professionally or personally. And like I said, I've got one deal tied up, and if anyone listening is interested in investing in multifamily, I'm happy to connect and hope to partner.
Yeah, absolutely. Maybe someone's listening right now, they're in the Houston area, maybe they're outside of Houston, but they're interested in the market. They want someone with boots on the ground, experience like yourself. Where can we find you?
Yeah, so I'm in Houston. I work out of a office building that I'm sharing with a friend right now. But you can find me on my website on Gaulke Capital, and there I have my cell listed, but I'm also very responsive to email. So I've got a little portal there that one can fill out, and based on the feedback I get, well, I'm happy to connect.
Definitely, Felix. I've it's been a real pleasure, talking about not only a bit about your background, kind of entering real estate, your experience in real estate, and everything from development to adding value to multifamily properties. So I've learned a heck of a lot, and it's been a pleasure to reconnect and have you on the show.
I appreciate you giving me the opportunity. Thank you.
Have a good one.
You too.